Now we're going to finish up lesson 2.3 about cars. This time we'll talk about financing, maintenance, and insurance. We covered these first two. Now we're going to cover these last two. First of all, before you buy the car, you need to understand if you're actually going to buy it or lease it. That's another way of saying long-term rental. With a down payment, you can get a loan to buy the car if you choose to buy it. With a lease, you still may come up with some upfront cost, uh, like a down payment, and then you pay a monthly fee just to use the car. So there are some pros and cons to that. We'll get to that in a second. If you were going to buy the car, you need to save up for a down payment, like we said in the previous video. Then you can get a loan usually to buy the rest of the car. Now you got to have good credit. You might even have to have a co-signer if you're young and you don't have any credit. Your parents can sign for you. But let's take one of those cars we were looking at earlier. It was around $15,000. If you add $2,500 for tax and licensing, yep, you do got to pay sales tax on cars, usually around 7 or 8%, depending on where you are. And licensing, you got to pay the DMV, Department of Motor Vehicles, for the registration and licensing of the car. Your actual cost out the door would be closer to $17,500. If you'd saved up $5,000, then you need $12,500 in the way of a loan. And if you actually go to the internet, you can calculate on a loan calculator what that's going to cost. Car loans seem to be going for about 3% right now. This would be a payment of almost $300 a month every month for 4 years. So that's something you got to think about if you're going to buy a car. If you don't have this down payment, then the payments go higher, obviously, because you have a bigger loan. The bigger the loan, the bigger the payments. The higher the interest rate, the bigger the payments. But if you can come up with maybe half that car's purchase price, you'll pay a much lower amount on your loan because it's going to be a smaller amount that you had to borrow. Anyway, if you don't want to buy a car, you can lease one. There are pros and cons to that. It's a new car, right? You have lower monthly payments because you're not owning the car. And it's an easy transition back and forth from leasing and giving the car back to the dealer. If the car is damaged, you do pay fees for it, whereas if you own it, obviously it's yours, so you don't have to pay anyone but yourself. The car is simply worth less if it's damaged. If you drive the car too much on a lease agreement, you may pay excess mileage fees because they limit your mileage because they want the car to still be worth something when you turn it back in. There's a fixed term, in other words, 5 years, 6 years, and there's an early termination fee. If you decide after 3 years that you want to get rid of the car or take it back to the dealer, then there's a fee for that. There's no trade-in value since you don't own any part of the car. You're basically just renting it on a long-term basis. If you're to buy the car, well, you get a new car, same as with a lease. You get a warranty with it. You get the latest features in that new car. You get it in top condition. You do pay a high price. That's one of the minuses. You do experience that instant depreciation because once you bought it, right, it's worth less, and you will pay higher insurance, taxes, and fees on it. Okay, so things to think about with leasing and buying. Cars are worth enough money to where you want to have insurance besides its California state law. What it does is it protects you against financial disasters. One of the things that really can ruin people's lives is a bad accident or a series of tickets or a DUI. And so what you want to be careful of is that you don't cause any injuries to anybody. You don't cause significant property damage to a vehicle or to stoplights or a house or a building or something like that. God forbid you would hit one of those. And there are a lot of liabilities with driving a car. You've really got to understand the dangers and how it can affect you financially. Insurance is a protector against that. So what are some of these terms you need to know in the insurance business? You buy a policy that provides you with benefits. These benefits cover you for various events or mishaps. You pay a premium for your policy. In other words, that's just the fee you pay to the insurance company. And this is determined by your driving record, of course, your age, obviously. Younger drivers, their insurance costs quite a bit more. Your credit record, if you have one, might affect it. If you're still a student, your grades can get you a discounted insurance cost. Most young adults or teenagers are on their parents' policy because it's much cheaper, but it's still pretty expensive. Okay, young drivers pay higher insurance rates because they are, according to statistics, quite a bit less experienced as drivers, and that's risky. Now, if you get in an accident, you may file a claim to the insurance company. What that means is you'll get a payment from the insurance company, but that will be the amount of the claim, but they take out your deductible. In other words, if you have a $1,000 deductible on your car insurance for comprehensive coverage or for collision coverage, then you had a claim for $4,500 in repairs. Suppose you got in a fender bender car repairs are much, much more expensive than people imagine. So suppose you had a small fender bender, cost $4,500 in repairs. You would not get a check for $3,500. For $4,500, you get a check for $4,500 minus the 1,000. So the check would be for $3,500. And usually that check goes to the repair shop. You don't get to pocket that, although some people try, and sometimes they're successful. The money's supposed to go towards repairing the car. So that's how that works. Be aware that you pay less premium if you have higher deductibles, but when you have a claim, that deductible comes off of the total bill for repairs. Okay? When you get car insurance, you want to think about liability that protects you against lawsuits because people get injured in car accidents, and sometimes it can be a lifelong injury that's very, very expensive in terms of medical bills and lawsuits and all that. Collision is when your car gets in an accident and you need to repair the damage to your car. Comprehensive covers things like theft or accidents like trees falling on them, or something like even hailstorms in the Midwest. Comprehensive covers that. So disasters to your car are usually under what's called a comprehensive policy. Property damage is if you hit something else, like if you drove your car into a storefront like this, or actually even if you hit a stoplight, right? The city who owns the stoplights or various properties, fences and walls and that type of thing, you may pay property damage for anything that your car hits and damages. Medical payments are to anyone who is injured in as a result of an accident that you were in. And of course, roadside assistance is a nice benefit for most insurance policies where if your car breaks down, they'll send somebody out to help you with that. Okay, so these are a lot of different types of coverage, but be careful. Choose the coverage that you think you need. Get advice from your parents or from an insurance professional and figure out what is affordable for you and what is the right kind of insurance for you to get for your car. Now, if you're in an accident, what's the wise thing to do? Well, get the vehicle out of traffic if you can do so safely. If you can't, just get out of the vehicle and sit on the side of the road, and hopefully police will come and mark off the area. If you have any red flares or any of those little triangles, those little glow in the dark triangles, those are good things to set up way in front of the accident so other drivers know that there's an accident up ahead, they'll slow down. Exchange information with the person with whom you were in the accident and especially get their insurance company and address. I would take photos if it's safe to do so, right? Don't put yourself out in harm's way out in front of the traffic. But once you have left the scene, I would then talk to your insurance company about what happened and decide whether or not to make a claim. Now, when you make a claim, your premiums can go up. So you've got to be careful. Ask your company what happens to your insurance premiums if you make a claim. Okay, so sometimes they'll have to ask you to make the claim first, but you should ask this question and see what they'll tell you about that. All right, maintaining a car, you really need to understand how often is service recommended, how often should you be changing the oil. It helps to know a little bit about your car more than just, well, where's the engine? Get a second opinion when you go to a mechanic if it doesn't cost you extra money. Shop around for specials and learn about your car. You need to know things about it. Remember that well-maintained cars are safer. They get good mileage or better than when they're not maintained. They handle better. They retain their value better. So these are good things to remember about why you should maintain your car. It costs money, but it's worth it in the long run because not maintaining your car can actually cost you more in the long run. So that's section 2.3, all about cars. Here's some resources for you. Edmunds, Kelley Blue Book, all of these resources here apply. And so this is a great resource for you, hopefully, if you want to go back and learn a little bit more about buying a car, maintaining a car, and getting insurance. Hope you learned something from it.